Good evening, ladies and gentlemen. Today is, I believe, Wednesday, September 27th. Yes, 11 p.m., Wednesday, September 27th. And I am James from Dividend Stock Talk, where we talk about dividend stocks and investing in dividend stocks specifically for weekly and monthly cash flow. Now, most people or most financial advisors or bankers or even relatives and fathers and parents and friends all tell you, annual return. Hey, invest for annual return. Get a good annual return. No, no, no. That's not what I do. That's not what I talk about. I talk about weekly and monthly returns. You go to the bank, deposit all your money, put it into a CD. What are they going to give you? 1% per year, 12 months, 52 weeks, 1%? Here, I strive to get 1% a week. If not that, let's try 1% a month. Why not? 1% a month is 12% a year. Compounded, it's 12, 13% a year. Once you compound it, it's like 13, 14, 15%, something like that. Because January, you get 1%. And then February, you get 1% on top of 1.1%, and then so on and so forth, all the way down the line. So you come to around December, it's not really 12% for the year. It's more like 15 or 16% because you're getting interest on top of interest. Now that's if you do it, monthly, for monthly returns. But I like to do it for weekly returns because I don't have a huge amount of capital. I don't have a lot of bills either. So I have a very small amount of capital, but 1% a week allows me to live comfortably. All right, so let's try to do the investing. Let's just jump on into it and take a look at some dividend stocks and see what they're doing this week. All right. This week, just like last week, or a little on the active side, we get 5 positions. And we can take a good look at them. Let's start out with BMY. BMY is Bristol Myers Squibb. So let's quickly open that up for those of you who weren't here when we first bought BMY. So I'll just quickly pull them up. Let's go to the 1 day, 1 year chart. 1 day, 1 year. Yep. All right, so Bristol Myers Squibb. You may or may not have heard from them. They're a very big, huge corporation. As you can see, this chart seems to be all over the place, but it's kind of really not. If you see here, the average movement is between 52 and 57 for the year. I mean, yeah, it did branch down a little bit. The low of the year was 46, and the high of the year is 63. But for the most part, she stayed in a little channel between 52 and right around 57, 58. So a majority of the trading is right in this area. Okay, so she's up here right at the moment. And we have, let's open this up. So let's view our trades of Bristol Myers Squibb. So we bought Bristol Myers Squibb at 52.5. Okay, 62.5. You see the number right there. Anyway, 62.5. And we sold someone the right to buy it from us at 63. And they are paying 76 cents per share to buy that from me at 63. Now I bought it at 62.5, $62.50, and they're going to buy it from me at 63, provided that the stock stays above 63 on 4 o'clock on Friday. Because to close the market on Friday, if the stock stays above 63, they're going to buy it from me, and I will have made 76 cents on top of that for the per share, plus the 50 cents per share. So that is $1.26. So I make $1.26 off my stock if someone buys it from me from 63. All right. So at the moment, she's at 62.95. We had 2 down days in a row. Today was a relatively up day. She opened up at 62.78 and she closed at 62.95. It's like 5 cents off of the 63, so we should have no problem with that come Friday. Hopefully, hopefully we'll stay where it is, that we can get rid of that and then move on to the next one. If not, hey, that's fine. Bristol Myers Squibb is a great company. They got the dividend coming up, I believe, next week. So if we don't sell it this week for the profit, then next week, because we bought it, I think, 2 weeks ago. What was the date that we bought this? the 23rd. That was only on Monday. Okay, so then I get 2 weeks. All right, and I got 2 weeks on Bristol Myers Squibb. So if it doesn't close above 63 this Friday, we'll probably do the exact same thing next week, and we might be able to collect the dividend on it also. So we collect a nice premium for the for someone to buy it. So think about it. It's a dividend stock. It's a great dividend stock because the company's been around for a very long time. They're corporate. I think they're. I'm not going to say because I honestly don't know. I really don't. They're a well-known company. They show very favorably on the software that I've created. If you haven't had a chance to get a look at the software, go over to their website, 10minutetrader.com, and get access to the software that we have created specifically to find these stocks. Okay, so as I was saying, it's a very good company. It's been around for a long time. It's got a dividend coming up. If I have to hold on to it for a long period of time, great. I will. I'll keep selling premiums against it. I'll keep selling calls against it to add up more premiums. 76 cents for a premium. If someone buys it from me for more than I paid for it, hey, great. But we'll see how that works out. That's not what we're here for. Okay. Well, actually, we're here to make money. So, that was a good one. All right. Next one is CAH. CAH, which is Cardinal Health. Now, Cardinal Health started out the year at 77. It didn't take them long to find the low of the year at 63. From there, they climbed for about 4 or 5 months to hit the high of the year of 84. And right around 81, they make a huge drop from 81 down to 72. Okay, that's a big drop. Goes sideways for a little bit, jumps up, tries to recapture that 80 move, but doesn't quite make it. And then she settles in around 77, and then right at 77, she has another big drop. 10% drop to 69, and from 69, she's been going sideways for the last 3 months. Okay, so that's the way she is, or the last 2 months. And here's where she is now. Now, she settled in at 68.14, and where are we? We got let's open this up, 66, 66 and a half. So we bought way down here for this spread, and she's way up here to 68. So I think we made out on that one. That's good. Okay, so Cardinal Health is good. Let's try Comcast, CMCSA. Comcast Corporation. Now, Comcast started out the year at 33. Took about a month and a half for it to find its low at 30. But from 30 right around, oh, come on, really? 11.7? What happened at 11.7? Election. Donald Trump gets elected. She has the low right there, 30.02, the election day. Then after Trump gets elected, look at this thing. It just keeps going up, up, and up. It finds its high about 6 or 8 months later at 42. So she jumps from 30 to 42 in a few months. That is almost 45% increase. All right. Got the high of the 42. Settled back down to the 38. Tried the 42 again. 42 and a half again, didn't quite make it, but she settled into where she is now at 38.53. And where are we sitting at 38.53? Because she got the dividend coming up in the next couple of days. Actually, not the next couple of days, the next couple of weeks. We got the 37, 37 and a half. Now she's well into that by 38 and a half, so we're making money on that one also. So CMCSA, we're good there. Now let's look at Cisco Systems. CSCO. I swear that could be Costco, but it's not. Cisco Systems. Now, Cisco Systems, not a lot of movement. I mean, you look down here, you got a double bottom here at 30, and you get most of the activity between 30 and 32. That's not a lot of movement. Okay, the low of the year. She starts out the year at 31, quickly drops down to 30, finds a low of 29, comes back up to the 30 area for a couple more months, jumps up to a trading range of 34. It looks like a big move, but 30 to 34, that's not that much. That's only a 10% move, 30 to 34. Okay, she goes sideways for a little bit, drops down, but basically stays in the 34 area. And then she gaps downward to 34, from 34 to 31. 10% decrease. It's not a huge, 10% up, 10% back down again. She goes sideways for a few months. Now she's testing at 34 again. A nice uptrend for the past month and a half. Finds doji right about here yesterday. And today she has a down day. She opened up at 33.78 and she closes at 33.48. All right, come on, it's not huge, but still a down day. Okay, and we are into Costco at, let's try that again. Went a little too quick there. All right, Costco at 33 and a half. Ouch. Okay, so we're 2 cents off of our mark. We have Thursday and Friday left to go to see if we're actually going to make the money that we want to make on Costco. All right, now we're not at a loss yet because remember, Costco can go down a little bit before it's at a loss. So if she stays where she is, we'll make a small profit. Okay, not the profit that we're looking at, but a small enough profit. But it's 2 days. Can she really hold her own for 2 days? I don't know. The stock market moves 3 different ways. Up, down, sideways. That's it. There's no other way it's going to move. Up, down, sideways. All right. That being said, we're going to keep our eye on Costco, which is kind of nice if you think about it. We got 5 trades and we only have to keep our eye on 1. All right, Oracle's the last one. Let's see. We're going to keep our eye on 2. Who knows? Oracle, O-R-C-L. Now, Oracle may or may not be a household name in your house, but where I come from, it is. So Oracle starts the year off at 39, goes sideways for about 3 or 4 months, and then slowly moves on up to the 44 area, where she then trades for about 4 months there, and then she gaps up yet again. Look at this, 1 gap up, and here's 2 gaps up, and this gap seems to be right at the 50 mark. She trades sideways for a little bit, found a high right at 53.11, okay, or high at right around 53. The high 53.14. They found the high. From the high, the gap's down from the 52. Well, actually hit the 53.11 here, and she drops to the 48 area, which she's been trading sideways for the past week. Okay, so she's at 48.16 now, and where are we? We are, let's try that again, went a little too quick. And again, quick again. All right, 47 and a half, 47 and a half. So we're in the money with Oracle by quite a bit. So that being said, we're in the money on everything. So we got the 47 and a half, and right now she's at 48. So as long as she stays above 47 and a half, we'll be good on that one. Now we got 2 days left. Is there really anything we can do for the last 2 days? We got plenty of money to spend, so let's see if we can spend some. All right, September 27th. So we're looking 1 week out, 2 weeks out. What do we got? We got 4th. We got that one. What do we have here? Oh, American Eagle Outfitters, J.P. Penny. J.P. Morgan, MasterCard. Is that right? That MasterCard? MasterCard. Gotta love MasterCard. So let's see what we got for MasterCard. All right, MasterCard looks pretty good. She starts out the year at 101. See that? And she goes sideways for 3 months, and it slowly moves up. Find the high of the year at 143. She bounces off the high of the year to settle down around the 38, 39 area where she is now. Now we get 2 days. Are they going to make this profitable for us to do a 2-day trade? Let's find out. Because you never know. You never know until you try it. MasterCard's a great company. We buy it, we hold on to it for a while. So we collect it. We collect the dividend on it. Big deal. All right, so it's at 139.67. So it would be 139. which is 83 cents. Huh. Okay, so let's see what that would equate to. $850. We're going to invest $4,200. So that's it's less than 25%, which I would consider ideal. So it's like only 20%. Is that right? About 20%? Okay, so do we want to do 20%? No, because 10% would be 42. Yeah, that's 20%. 20% for 2 days. Why not? Okay, 20% for 2 days. Let's give it a try. Ooh, you know what? Before I done that, I should have checked the seasonality on MasterCard. So let's quickly check that. All right, here we are, right here. Flat. I like flat. Do you know why I like flat? Because if she stays right where she is, we are good to go. So as long as she stays above 139 the next 2 days, we will make that 20%. Okay, did you follow me on that one? All right, let me go back to here. What the heck? All right, back to the standard chart. Okay, you see where my MasterCard's been doing? She's starting off the year at 101. She's going sideways for a little bit. I mean, that's basically sideways from 101 to 104. You know, basically not really doing anything. Then from 104, actually, really, at the beginning of the year, January 1st, she makes a little jump. Okay, a little bit of profit taking. You know, it brings it back down. But as you can see, from 105, she just continues. It's a nice movement going up. And right here at the beginning of September, she gaps up from 133 to 135. And then again, from 137 to 139. And she's been going sideways for the last few weeks. Let's open this up right here a little bit. Okay, say, here we go. Now, what day is this right here? September 7th. Why is there so much volume? Well, could the volume come from the market maker going from the close of 132.89 on the 6th, and she opened up at 136.08? Why the big jump? You know, that's a good question. 132. Okay, she closes at 132.89. The very next day, she decides to open up at 136.08. That's a nice gap up for whoever owns it. And guess what? Look, she trades nicely that day. She, you know, the low of the day was, 135.65, and the high of the day is 138.64. Great. So she leads into the next day, which is another up day. You know, so why would the market maker open lower the next day than it did the previous day after a nice gap up? You have a nice gap up. Look at that. A nice gap up. Okay. A nice high, nice low, nice movement. Okay. But she closed at 136.53. So think about this. If it closes at 136.53 after a nice big gap up, you know, on that day, why would the next day she open it up lower? Anyway, she opened it up lower the very next day because she closed at 136.53. She opened up the next day 136.22, lower than the previous day's close. Why the market maker do that? Whatever the reason, I'm sure they have their reason. Had a nice day. She opened up at 136.22. She closed at 137.22, a dollar up from the previous day. I mean, from the day's opening. So the very next day, the market maker gaps up again. Okay, she closed at 137.22. The next day, she opens up at 139.36. Okay, now this was just a couple of weeks ago. Okay, that was just this month. Okay, so for the past couple of weeks, she's been basically going sideways at 141, and then at 141.77, she drops down here, which is 2 days ago, that Monday. Yeah. Never fails. It can be all wired up, and I still yawn when this thing turns on. Okay, so she had a down day today, Monday. Tuesday was another down day. Okay, what's she doing here? Last Friday, she closes at 140.189, and then Monday, she tried to open up at 142.07, a little bit higher than Friday's close. Didn't work out. Stock dropped and closed at 138.57. Next day, she tried getting it up again. Doesn't do it. Okay, she closed lower. Okay. So today, she opened up at 138.80, closed at 139.67. Great. Where's she going tomorrow? Who knows? But I can say this: as long as she stays above 139, I'll make my 20% on that 2-day trade. 20% for a 2-day trade. Hey, I don't know how you can go wrong there. Well, you can go wrong if it goes down, but hey, it's MasterCard. Great. I'll hold on to it, collect a dividend. And dividend's coming out in 2 weeks. Okay. Oh, wait a minute, 1 week. Is that right? Yeah, October 5th comes out next week. All right. All right, so that was MasterCard. Monsanto. Monsanto always comes in good. 54 cents for Monsanto. Let's quickly take a look at Monsanto. And wow. Now, excuse me, this is going to sound kind of strange. Although this chart looks like it looks good, I'm not really liking it very much. Number one, I really don't like Monsanto. Great company, they make money, they pay out a great dividend. But, you know, genetically changing plants doesn't really go well with me. We don't have a right to put the responsibility of making choices for future generations today, because we don't know what's going to happen 5 generations from now. Whatever choices and decisions we make today, it affects our future generations. And I don't think any company or any person should be able to do that. I don't like Monsanto for that reason. They might be a good company, but anyway, my personal opinions aside, let me give you the reasons why. Okay, she goes sideways for a little bit here. At the beginning of the year, she starts out at 102. It takes about a month and a half for it to find the low of 97. From 97, which was, lo and behold, you guessed it, Election Day, November 8th, November 7th, November 8th. From there, from 97, she jumps up to a trading range to 116. That's a $20, right around a $20 increase, right around election time. Right, anyway, she trades at 116 for quite a while, going sideways. And the last 2 weeks, she has found the high of 120.39. That's the high of the year. Now she's bouncing off the high of the year for, yes, that was Monday. So Tuesday she used a down day, and Wednesday she used a down day. What is that going to tell me? This is the high of the year. We're really going to press for a higher high, and we're looking to get 54 cents. So at 119, what do the numbers look like? MON. 119. 86 cents. What does 86 cents look like? About 5%. Is that right? I don't know. Yeah, that's not even worth it. Because you're so close to the next one, 119, which would be 120, and you can't really tell with the spread. Look at the spread. Negative $1 and $4.80. How can you even tell numbers with that? It last traded around 86. Let's check out the seasonality from Monsanto. All right, Monsanto. It looks like it's going to go sideways. So she may hold her own, but for some strange reason, it just does not. I just don't like the way it looks. You know, let's go back and look at the whole 1 year. Okay. She bounces off at election time. From election time to where she is now. Look at this trend right here, going sideways from April until October, September, sorry, from April to September, trading sideways. And all of a sudden, in the last 2 weeks, she jumped up from the 117 up to the 119. She actually even hit 120.39 or 120.38. That was the high of the day, or the high of the year. And she's at 119.35. So it's not a lot. I mean, can she really hit that again? I don't know. It's only 5%. And I don't really want to invest any money at 5%. Not for 2 days, especially when there's other trades out there. So let's look at something else. JP Morgan. Ooh, how about American Express? If I'm going to do MasterCard, I might as well do American Express. 35 cents. AMX. AXP, sorry. AXP. All right, I'm going to say no right off the bat because she's at the high of the year. You know, I don't do stocks at the high of the year, and I don't do them at the low of the year. If you're at the high of the year, you're standing on a ladder trying to reach for the sky, reach for the stars. At the low of the year, you're in the basement digging a hole. Don't get me wrong, American Express is a great company, very much equivalent to MasterCard, but she starts out the year at 64, it's almost identical to MasterCard. Okay? She, within a month, she finds the low at 59, finds a little bit of peak just before election. You know, a couple weeks before election, she jumps up to the 66 area. At the election day, right there, 11.7, she jumps up and continues to go up, follows a trading range of 78 for a few months, jumps up again, finds another trading range of 84, jumps up again. She's right at the trading range of 89, and that is the high of the year right now. And today was a down day. They're trying to break through a higher high of the year, because prior to this one, which the market maker, for some strange reason, it closed Tuesday at 88.69. For some strange reason, the market maker tried to push it to 88.68. What? 88.69. It closed yesterday. And today, she tried to open up at 89.68, like a buck up, that right? 88.69, 99 cents. And what was the reasoning for the 99-cent increase from the market maker? And look, it's like the volume didn't even change from Monday to or last Friday or last Thursday. It's almost the exact same volume today. Okay, anyway, today was a flop. She's looking for that 99-cent up. She's trying to get a higher high. I mean, when have you ever heard the market maker opening up at the high, higher than the high of the year? The high of the year was 89.38. That was the high of the year prior to today. Why would the market maker go higher than the high of the year for today? It didn't work out for him or her. I don't know who it is, but you know, she closed at 89.49. So that didn't work. And I try not to do this. I do not want to go in. I'm going to take a look at the numbers just in case any of you guys are curious. Let's take a look at AXP. All right, 89.50. Oh, so if she can stay at 89.50, that's a relatively decent return. I would say close to 50%. It's like a 47, 48% return. But if you guys want to do that, great. Let me take a look at the seasonality, give you an idea of that. And you might want to check this, the software that we created, see how well that's going to look. All right, there's my final answer right there. Here's where the stock is right now. This red line represents the trend based on historical performance, downward. So that's a no for AXP. Anyway, that being said, let's do one more trade before we're done for the day, because I want to make me a little bit more money. DG, oh, that's our Dollar General and Verizon. Let's do those. Okay. I love Dollar General. Everybody loves a bargain. It looks like it's all over the place, but not really. You get here 69 to 79. It's only a $10 move for the whole year. She starts out at 71, and right now she's at 79. And she's kind of at the high of the year. So let's see what they're offering, DG. And I said I don't trade at the high of the year. So we're going to look at this one, and it's probably going to be way out of there, 79.50. That can't be right. She got the dividend coming up next week. She's at 79.93. So as long as she stays above 79.50, can that be right? That's around a 40% return. Before we do anything, let's check the seasonality on DG. Seasonality for DG is down another day and then sideways. Not enough sideways move, because it's only a sideways move for like 3 days. 28th, 29th, 2nd, 3rd, 4th. So now I don't base all my decisions on this, but you can clearly see from where she is right now, which is the high of the year, that is definitely a downward move. So sorry, I like 40% return, but not going to work. Marvel, it's too small of a dividend to chase, but Verizon, we'll take a look at this one, and that will be it for today. All right, Verizon, let's go back to the normal chart. Here, I might as well just take a quick gander at Verizon. Sorry, Verizon down. I don't even want to look at the other one. Next week. Oracle, we already did. ABB has always been a good one. ABBB. AbbVie. That's sideways for a week. See, right here. That's sideways. All right, so let's take a look at the other chart. All right. Starts the year at 63. About a month and a half, she finds a low of 55. Jumps back up to 63 area. Goes sideways for about 4 or 5 months. Jumps up to 66 for a couple of months. Jumps up to 72 for a couple of months. And then for some strange reason, she jumps from 74 up to 84 in the last couple of weeks. Now, I could be profit taken right here, but what is this? I don't know. 3 down days in a row? I'm not going to want to jump in to test the waters. But let's check what. Didn't I just check this a second ago? I did. Alright. Sideways. Damn it. What are we looking at? ABBV. ABBV. AbbVie. What does AbbVie even do? All right, AbbVie's at 84.75. That's a little over 30% if she stays above 84. You know, if she stays above 84. And how many weeks do I have with AbbVie? I got 2 weeks. All right, I like 2 weeks. All right, so if I do this one, 2 days, that's over 30% for a 2-day trade. Let's see how she works. Well, ladies and gentlemen, that's what we got for today. We got 2 orders, ABV and MasterCard, for tomorrow. Okay, so they should fill first thing tomorrow morning, provided that the market maker is generous. And we will see how they fare. Other than that, this is James. Oh, before I go, let me quickly check, see if we have any questions. No questions. All right. That being said, we get a 40% trade for ABV, and I think it's a 20% trade for MasterCard. So let's check those out. And we will see you tomorrow. Tomorrow's Thursday, so tomorrow night we will see you and see where we stand with these 7 trades for this week. Not bad. All right, this is James signing out from Dividend Stock Talk. You guys have a great day. I will see you tomorrow. And you get a chance, check out the website, 10-Minute Trader. Sign up for the membership. Get a hold of some of the software. And make these trades yourself. Now, these are just the numbers right off the top of my head. The software that we've created is a lot more than what I'm doing here. A lot more accurate. But that software is exclusive only for the members. Anyway, this is James signing out from Dividend Stock Talk. You guys have a great day, and I will see you later.